We heard from Siemens Energy in terms of surging energy demand from AI data centers has helped the company's power grid division post its highest ever quarterly revenue, with the company-wide sales for the fourth quarter coming in at nearly 10.5 billion euros. The firm has upgraded its midterm growth and profitability targets as well, now expecting its profit margin before special items to rise to as much as 16% in 2028. That's up on its previous upper bound of 12%. In terms of their Frankfurt-listed shares, they rose nearly 2.5% on the news, while its main listing has more than doubled in value this year, making the company the sixth largest in Germany. So let's discuss what's going on with this business. The CEO, Christian Bruch, is joining us this morning. Christian, always great to have you on the show. Looking at the full year, it seems that you're posting a very decent performance in the fiscal year of 2025. I would like to get your thoughts in terms of what do you think were the main reasons behind this performance?
Yeah, first of all, good morning. Thanks very much for having me. It's always a pleasure. 2025 has been a very successful year for us, and we achieved all our targets. We overachieved certain targets which we have set ourselves. And keep in mind, we upgraded our targets throughout the fiscal year 2025. Honestly, it is the base of it is a lot of hard work of the team at Siemens Energy. I mean, we see a good electricity market. We have very successful products positioned, and the organization has been tremendously good in working off also a big backlog. We have been growing revenue by 15% this year, and you're in an organization like ours, which at the end physically produces something. That's not an easy task. But the team has been awfully disciplined, working through the matters, and this allowed us really to drive double-digit margins in all the business areas except wind. And wind was really this year about stabilizing it. And this is also what the team has achieved, driving productivity in the factory. So I'm super proud of the team at Siemens Energy.
Let's discuss what's happening in wind then. As you look at the next year, and we know how much pressure there's been in this part of the business. You talked about how it has been about stabilizing it in 2025. But what is the outlook for 2026?
Look, it's a little bit the tale of two cities. If you look on onshore, it was really fixing the quality issues. We are back in the market with the products now. However, obviously, you don't see big new unit sales yet. This is still to come. So that is really about fixing the things and stabilizing. In offshore, it was very much about ramping up the factories. There is a big backlog in offshore, which gives us the work for last year, next year, and so forth. And there it was really making sure that the factories bring out all the nacelles and blades which we need to produce. And just to give you a feeling, we have in Cuxhaven, which is our large offshore nacelle factory in Germany, we have increased the output by 30% in the last year compared to the year before. And this shows you that the productivity measures really come through. And these were the two main elements which helped now the wind business to stabilize.
I would also like to look at shareholder returns. Looking at today's numbers, you're in a position to announce the return of dividend payments for the first time in 4 years. Walk us through a little bit more in terms of that decision and what shareholders can expect going forward.
Yeah, first of all, I would invite every shareholder to join our Capital Market Day next week. We will talk more about capital allocation, including also return to shareholders next week. We want to keep a bit the tension up, so I would say tune in next week. But I'm very glad that we were able to lift the dividend ban, which was linked to the back guarantees of the German Bund, which we cancelled last fiscal year. It was not clear whether we could pay dividend from a regulation perspective, but the government lifted this dividend ban, and obviously we want to return money to the shareholders in the dividend policy, which we gave ourselves when we started the company. And if you look on it, you see that we roughly return 50% of our net income attributable to the shareholders. And that is something, obviously, we will explain more next week on what else to be expected also over the years to come.
Well, we look forward to that. In the meantime, I would like to get further thoughts in terms of the outlook here, because one of the reasons why you're increasing your midterm targets is because you expect a positive outlook in terms of the energy market. My question to you is, why do you expect that? Is this purely because of the AI-driven demand that we're witnessing at this stage?
I think that's a super important question. First of all, we are the foundation for a lot of AI facilities because we produce electricity, what really fuels the AI revolution. However, I also want to make very, very clear, I mean, today, 2% of the world's electricity consumption is AI. We expect it to go to maybe 5 or 6% in 2030. So it's important. It's a great market to be in. We are very happy that we are successful, but it's not the majority of our business. The majority is really classical electrification, population growth, increasing electrification in other industries. So there's a lot of other things which fuel our business. And that's important for us to diversify the base of our customer in the applications, but also in the regions. And this is what we're looking very carefully on. In this regard, if you look over the next years to come, we are very confident that electricity continues to grow in different industries. Yes, AI will be a part of it, but it's definitely not the whole story. And we always have to keep it in mind because I have the feeling there's a big nervousness about AI. Sometimes you see it yesterday in terms of fast reactions. One thing is clear, AI will happen. And the only question is, okay, how fast is the speed? But for us, the underlying infrastructure in electricity is needed anyway because of adding renewables, more electrification, more electricity, and that's a good position to be in.
I just would like to clarify something before we conclude, Christian. Because we have seen those market concerns around AI valuations, are you therefore thinking about your strategy, indeed, as a diversified business, as a way to protect yourself against extreme moves in the markets?
Look, we always have been trying to balance out our picks in terms of where do we take orders. At the same time, we also want to make sure that if people invest into an AI, they do have the electricity needed. I mean, see it from the other side. At the moment, everybody is looking on, hey, does this bubble burst? Let's assume the bubble comes and you would not have the electricity. How bad would this be? And this is always the balance to keep. But what I would say is we see enough needs for electricity to position our products in the market. We are increasing capacity quite heavily, and we are strongly confident that this continues. And what now the exact flight level of the AI build-out is, I don't know. But what I do know is there will be more electricity because of AI happening, because AI is something which will not go away. It will be with us, and it will need electricity.